Hey everyone, Couch Investor back to another video for today. So C3ai, ticker symbol AI, probably the best ticker you can have nowadays as a publicly traded company, reported their quarterly earnings. Now it was a beat when it comes to non-GAAP EPS, still a loss, but a small miss of $1 million or so when it comes to revenue. Now I do want to remind some of you what was going on a couple of months ago, even longer than that, when it came to the ticker symbol AI, C3ai as a company. So back at the end of July, I made this post on X. What do LeBron James and Lionel Messi have in common? Well, they are both used by Dan Ives when initiated coverage of Palantir and C3ai. C3ai back then was at $138, was down 71%, and a price target of $200. The LeBron of AI setting up for massive growth, and the Messi of AI on the golden track to success. Of course, one company has been pretty successful this year, the other not so much. Then, in September, C3ai reported non-GAAP EPS of a loss of 9 cents, beaten by 8 cents, revenue of $72.36 million, an increase of 10% year over year, massive growth, right, for the LeBron of AI. Net income loss, October 2021, a loss of $56.7 million. Net income loss, July 2023, $64.3 million. SBC, October 2021, $32.5 million. SBC, July 2023, $50.88 million. And you can already imagine by my reaction that this quarter was not that great either. We'll start off by talking about what was mentioned already in the earnings call. With regards to the sales headwinds in this quarter, while the interest in AI application and especially generative AI is growing substantially, we're also seeing in many cases lengthening decision cycles. This is not great. They try to explain it by saying that virtually every company in the last 3 to 6 months has created a new AI governance function as part of this decision-making process. These AI governance functions assess and approve those AI applications that will be allowed to be installed in the enterprise. This has candidly added a step to the decision process in AI. You might have heard it here first, but you will be hearing this from every AI vendor in the next 3 quarters. Take it to the bank. Well, a bit strange that they think that they are leading here with regards to AI applications, the sales cycle, and stuff like that, when I truly believe that in the last couple of quarters, they were boasting that, well, their sales cycle is actually shortening. So what has changed so much in one quarter? Probably not that much. It has more to do with C3ai, the company, than it has to do with the broader AI market. I mean, this is the end of the earnings season. We've seen plenty of companies already operating in this same environment, whether it's UiPath, whether it's Palantir or any other player out there, and they have been performing quite okay. So yeah, I'll take it to the bank. Anyways, before continuing with this video, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. So I'll start off with a couple of comments here. It was a solid quarter with total revenue growing 17% year over year to $73.2 million and customer engagement growing by 81% year over year. We saw unprecedented interest and traction in our generative AI offerings. Importantly, we are seeing a return to accelerating revenue growth. This is, by the way, true, which is a positive, as we continue our transition to a consumption-based pricing model. In the trailing 4 quarters, we have seen top-line year-over-year revenue growth increasing from negative 4% in Q3 fiscal year 2023 to 0% in Q4 fiscal year 2023 to 11% in Q1 fiscal year 2024 to now 17% in this quarter. So yes, there is reacceleration of revenue growth. With regards to financial outlook, so for the third quarter of fiscal 2024, total revenue to come at a midpoint of $76 million, which was a smallish meet from consensus. Fiscal year guidance seems to be closer to $310 million. Third quarter non-GAAP loss from operations, a loss of $43 million. And as for the fiscal year 2024, that's closer to $125 million. Now, if we scroll down and we dig a little bit deeper, so Total revenue, as I said, that increased 17% year over year. But if you look at the cost of revenue, total cost of revenue has increased way more than total revenue. And so right now we're seeing gross profit basically being flat year over year. If we look at total operating expenses, that has also increased year over year. If we look at net loss, it's basically flat-ish year over year. Then with regards to stock-based expense, we are actually lower than we were last year, same quarter. And 6 months ending, we are also lower by around $8 million. Why is that? Well, the big reduction here comes from R&D, research and development. Last year, same quarter was closer to $24 million. Right now, we're sitting at $16.6 million. So that's why you're seeing a decrease here in stock-based compensation year over year. So if we continue here, we can clearly see the reacceleration in growth. Of course, back in fiscal year 2022, growth was 38%, but fine, we've seen deceleration across the board, but it's nice to see that you go from a negative in Q3 fiscal year 2023, and then you're now up 17% year over year. So congrats for that. But the average selling price continues to decrease here for the last 2 quarters already. Then customer engagement, we are up by 81% year over year. As for customer count, they stopped reporting that number. Bit strange, but okay. RPO continues to decrease here as well. Then with regards to bookings, new agreements and pilots, so quarter over quarter, nice growth there, and year over year as well across the board for all 3 of them. But I still have a lot of question marks. Why, if you do not give us customer count anymore, why even show this in this slide? It doesn't really paint a pretty picture. And when you look at RPO, same thing there. I mean, we can see this declining for quite a while, but okay, if you don't give us more context, fine. Then a couple of extra things here. So non-GAAP gross margin 69%, free cash flow negative $55.1 million. Then when we look at the deals this quarter compared to last year, so many more deals under $1 million, a bit more between 1 million and 5 million, and then the same between 5 and 10, and 0 deals that are worth 10 or more millions of dollars. As for the bookings diversity by industry, nothing much has changed. So the majority here, 49% federal defense and aerospace, then 19% manufacturing, and then you have all the rest. If you look at pilot and tries diversity by industry, here it's a bit more diverse. So 25% manufacturing, 22% federal defense and aerospace, 14% financial services, 8% engineering and construction, and 8% life sciences. And then you've got all the rest here. When you look at generative AI pilots and tries diversity by industry, again, it's a bit of the same. Federal defense, aerospace, 25%, financial services, 20%, engineering, construction, 15%, and chemicals and manufacturing, both 10%, as well as state and local government. Then when we talk about the new model here, so the consumption-based revenue transition, so they show us here 3 phases. 1, the introduction phase and transition from subscription revenue model to consumption-based revenue model. Then phase 2, which they are now in the middle of that, deal ramp and early consumption. Then phase 3, scale out and consumption acceleration, which you can see the blue line here is the consumption revenue model, which should be much better for this company. Then switching to the graph right now, what could have been a type of cup and handle pattern in the making right now after this earnings report, which the stock is down around 10% or so. I don't really think we can call this a cup and handle pattern. We're now back at $26 or so. Of course, during the day, the stock can go lower or can rebound as well. There is definitely a support at around $24, $25 or so. Right now, RSI is still pretty neutral. Currently, if you want to have a look at the average price target from the analyst, it sits at around $27.25. So now a bit higher than the $26.34 we're at before the market opens. But previously, that target was 6.55% lower than the price we were yesterday. This year, year to date, the returns have been quite phenomenal for C3ai. It's up 160.5%. Then if we're going to look at the expectations for the next 2 years with regards to sales, we are seeing some reacceleration. So for fiscal year 2025, closer to 20%, then fiscal year 2026, above 23%. So to conclude, despite seeing some reacceleration in revenue growth, which is a big positive, I really don't know why, if you want to have exposure to AI, why you would be going with this type of company when you've got others out there. UiPath, Palantir, the big guys, Google, Microsoft, Amazon, Meta, Tesla, Nvidia, etc., etc. The list goes on and on and on. Quality companies with a much better track record than C3ai. Again, I'll repeat myself, the best thing this company has right now is its ticker symbol. I mean, for a company that has changed its name for a couple of times already in the last decade or so because of switching of the trends, I mean, that should provide you with enough red flags to go and invest in something else. So that will be it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.